Actually, take that point forward with Peter McGuire as well, CEO at trading.com. Now that this big day is finally going to be behind us, 24 hours from now, what is the commodity world looking out for? Peter, hi, great to have you on. I want to start with gold. I mean, it's been sort of the mother of all bull runs, at least in the last 12 months, including, of course, this calendar year. But a lot of commentators are saying that maybe April 2nd is the peak of the tariff tantrum. And then you gradually start moving to more certainty. The numbers are known. The negotiations start getting known. Do you see gold anywhere close to a top?
Well, good morning, Surabhi. I mean, lovely to see you. I think the overall momentum, and building on what you have just said, and certainly what Manisha mentioned, it's been extraordinary. You can't take your eyes off that 19% up to the upside since January 1, that 3-month window, extraordinary. Now, whether we're going to see whether we're at the top now for the next 3 to 6 months, or there's further legs to run, 3150, 3250 are those sort of psychological barriers, and everyone's focused on 3250 as the key number. Now, I'm conscious as far as President Trump, we all understand, and no one knows until 2000 GMT today when we get that drop from, and how he explains moving forward. So, Surabhi, I'm still believing that there's much more upside over Q2.
Peter, you said that would be the first port of call. And what's the next medium-term level?
I think it's got to be 32.50. I feel as though that overall momentum, if it was to put on another $100, that's the big psychological barrier. And that's what many analysts are saying is the real key driver. If it gets to that number, then I think we're really going to see some, further horsepower to the upside.
Hi, Peter. Good morning. Good to see you, Ben. One bearish call or one point that people have been raising is the gold RSI. That's moved to 70-plus levels, and normally we see a bit of a pullback, but it appears as of now it's got the momentum with it. The other question I wanted to ask you is on silver, because many are talking about silver actually being a better play, and from here on, maybe it outperforms gold. Are you in that camp?
Yeah, I am, Nigel, and good to see you. And I think a couple of things. I'll answer the silver one first. We've had 2+ decades of underinvestment across that whole capex moving forward, and when we look in retrospect. So for the gold to silver ratio, I think it's very much out of kilter, and I think that you probably see further up, not only further upside for silver, but really start to take some big leaps forward. And I feel as though that you'll see a narrowing of that relationship between the gold to silver ratio. I'm not prepared to go out there on a limb, but you've only got to divide one by the other, and that'll tell you where it is at the moment. The other side is, as you mentioned, the overall US dollar impact, what's happening as far as risk, where does the rest of the world see it? Precious metals seem to be the place to be, and it's certainly everyone's focus at the moment.
But beyond the very near term, right, and markets will, they're forward sort of looking mechanisms in that sense. If the US, the Trump administration is able to do some of what they are wanting to do, lower the cost of debt, lower deficits, et cetera, I mean, that is long-term positive for, some of the other risk assets and not exactly safe haven assets like precious metals. Would you agree with that?
Well, I do agree with that in a lot of ways, Prashant. Good morning. I feel as though that there are so many moving parts with this. You've got huge central bank buying, if I look at the gold situation over the last, let's say, 5+ years. Secondly, retail investment, and India is just a classic case. People storing it as and you've been doing that for hundreds, if not thousands of years. And that momentum seems to be picking up across the fabric of society. And that's global. And then, of course, you've got the paper market, and then you've got the other side, the fear entering the markets. Where do people see? And if President Trump, as you mentioned, is able to pull off all of these major structural changes, which would in turn boost the US economy, one would think that maybe a little bit of that hot air would come out of gold. But again, this is a work in progress, and at the moment, it's very hard to stand in front of this train, because I think you'd get run over by it.
Yeah, absolutely. Not that too many people in India would be complaining. I think they've been on the train for many years, like you're saying, right? So they're happily riding along. Peter, on oil, and oil is interesting. Yesterday we had a chartist who suddenly said that he's seeing $90 on the charts. I don't know how, because Manisha was telling us that OPEC is getting ready to pump more. Trump is all about drill, baby, drill. The only outlier I see in the situation is that ceasefire not going through because they're still talking around it, Russia-Ukraine. What's your sense on oil?
Well, Surabhi, I mean, that's right. But there would have to be, I think, for that to hit $90, and I'm not in that camp at the moment, but that would be, I think, a geopolitical play. And that would be something dramatic happening as far as Strait of Hormuz, and there'd be an attack of some description, I think, on Iran for that to materialise. And let's just hope that we don't go down that side of, from an economic and from a warfare side. But that would be, I think, would underpin from that geopolitical risk premium built into it. I agree with you. I think President Trump's going to increase it. The Gulf, as he renamed it, Gulf of America, he is going to add value and really drive production. So there's the first side. And I think OPEC are going to certainly pump more. So I'm looking over this Northern Hemisphere summer, actual softness across the crude market as far as price.
And in terms of levels then, since you're not expecting any sort of a spike unless there's some outlier geopolitical event, but otherwise,
Exactly.
What's the range for the summer?
Well, I think I would like to be under 70 for Brent, and I think 65-ish for sort of WTI. If it was to break those sort of numbers and further downdraft, I'm conscious as far as US dollar. I'm really conscious as far as what's happened with equities over the last couple of months. There's so many components to this, and naturally you think of far as what happens with US dollar. The bond yields, 4.2 for the 10-year, all of these factors. So, yeah, I'm thinking weakness, and there's plenty of crude out there.
Okay, well, it's good for us, Peter. We can do with oil staying stable. We're a large consuming country, right? Thank you very much for joining in. Good to have those views with you today. All right, that's Peter McGuire.